Hey, it's Melanie here with Fairway Independent Mortgage Corporation, and I am here with my friend Gytha. Gytha's with Keller Williams Realty, and we just got back from a seminar for our Homes for Heroes, and we were talking about what we're seeing right now in the market. And Gytha, what are you seeing mainly in the Colorado Springs or Colorado market in general in terms of prices and affordability and inventory?
Well, we don't have enough inventory, but the prices are making it hard for people to get the homes that they really want. And the interest rates, of course, affect their buying power. And so, Melanie and I are talking about how can we help people get into a home? Because the first step to financial independence is being a homeowner. Because when you rent, the interest rate's 100%.
Mm-hmm.
But when you buy, you can be usually better off than renting, especially here in Colorado Springs. We are benefiting from a good economy, the military presence, where we have a lot of appreciation, that we have seen historically. So
very true.
Mm-hmm.
So, and one of the things we were talking about, we were talking about a few things actually just now. So we thought, let's just tell everybody what we are thinking on brainstorming. One of the things I know is what I come across a lot as a lender is that people need down payment assistance.
Yes.
So one of the things is people say, well, I can't buy a house because I don't have enough money down. Well, the good news is Colorado Home Finance Authority, which is CHFA. Also, if you're up in Denver, there's Denver Metro. If you're in a rural area, there's USDA. So there's no money down options available for you if you qualify. And they've actually increased their income limits where before it used to become really kind of hard for families because they made too much money. So we talked about that as being an option.
Yeah.
And so those are down payment assistance options. And right now we're kind of in a pocket, right? Don't you think? It's fall. Like there's been more inventory opening up.
Yeah.
So maybe right now in this pocket of time, September 2023, is that, there might be more, availability for homes for sellers to be willing to maybe pick up closing costs.
Yes, because you're right. Like typically the number of buyers out there peaks in like June.
Okay.
And now these sellers who are selling homes, they're serious and they have to sell. And so it's a great opportunity for a realtor and a lender to work out some terms, to negotiate closing costs, concessions, to make it work so that the seller says yes.
Agreed. And then sometimes if sellers are kind of saying, okay, gosh, maybe I need to come down on my price point.
Yes.
Another idea we had when we were talking was instead of the sellers doing that, if you're a seller and you're thinking, gosh, maybe I should lower my price. First of all, call Gytha because she's amazing and she really knows her stuff in the real estate market. We could actually maybe but instead of lowering their price, let's just say I did a scenario the other day on a $400,000 home, and it would cost about $10,000, a little bit over $10,000 in order for the sellers to pay a 2-1 buy down. Well, what that means is that the sellers pick up the interest for the first 2 years. So rather than starting out, let's just say at 7.25%, the first payment rate is at 5.25%, then 6.25%, 7.25%. The idea behind that is your first year's payment is at the 5.25%, and what the experts are saying is that in Q4 or Q3, Q4 of 2024, we should see the rates come down. Yeah. So the thoughts are to hopefully refinance you out of that into a 5% fixed rate at that time. And those buy down fees do transfer over to the new loan. So it's not like it's money lost, but it helps you get into a home, even though you have to qualify at the 7.25%, but with a more affordable payment.
Right.
So the
you look longer term. Look longer term and help the seller see, don't reduce the price, but pay for the buy down.
Exactly.
And then work with someone like Melanie to help you plan ahead.
Right.
Yeah, absolutely.
And that was another idea. And then one of the other ideas we had thought about was what people aren't talking about. Yeah. And that is that, unfortunately, with where inventory's gone, especially in Colorado, Colorado Springs, prices have gone up. Inventory is, still short, although it's freed up, like we said. But it's also made prices increase, and we don't really foresee prices coming down. So what does that mean for you in terms of qualifying? And that could be maybe thinking outside the box.
Yes. Yeah, we were thinking, are we ready to go there? Maybe you get together with a friend or family member in the same city.
Yes.
Or, there might be scenarios that Melanie can help you think through to qualify. Get together, maybe buy a house together. And then in a year or two, you can turn it into a rental and buy another home together, etc. So maybe pooling your interests, pooling your buying ability is something that I haven't seen happen. I think it would be an excellent opportunity to get a better house in a better neighborhood with more bedrooms that you can maybe rent out a room or two to help supplement and cover your costs with a person that you can buy a house together with. And kind of think outside the box and get into the game.
That makes a lot of sense, because from the lending standpoint, you can use both incomes to qualify, therefore freeing up the ability to be able to buy a substantially much better house.
Yes.
Something that's not in a sketchy part of town or where you're not comfortable living, or where maybe your kids go to school and you don't have to leave the area.
Yeah, that might mean together you buy a 4-bedroom home and you have 2 bedrooms for you and 2 bedrooms for this other person, versus alone you wouldn't even be able to find a home that you could even afford on your own. So you could just have a better place.
Exactly.
Yeah.
And one other thought to kind of maybe wrap this up as well is like, if sellers pay closing costs, that might help free up some money for you to come to the table with some money, and or to help free up that money to pay off some debt, to keep your debt to income ratios aligned to where you can qualify for that higher price point. Rather than putting a down payment, going with a down payment assistance program to where it frees up cash for you to be able to pay off maybe a car loan instead, to free up that extra money a month, which is substantially more savings. So let's just say, you have, I don't know, a $7,000 car payment, and you're going to come in with that for your down payment, and your car payment's $400 a month. But by just that $7,000 difference in price point, you're looking at less than $60-70 a month. Well, actually less than that. Every 10,000 is about $60 a month in payment. So you hardly increase your mortgage payment, but your cash flow every month improves substantially.
It's huge.
And it helps you get to here versus down here. So again, like if we run into people that they're getting declined from other lenders, maybe those lenders aren't thinking outside the box and looking at these different alternatives for buying. So either A, go chafa, ask for 2-1 buy down, ask for closing costs, pay off debt, or buddy up. Right?
Yeah.
Buddy up.
Yeah, perfect.
Okay.
First call is to Melanie or me, and we'll be happy to have that conversation.
Absolutely.
Yeah.
And definitely get formally approved first, and then Gytha will gladly, go through her scenario with you on exactly what to expect when you're buying a home, so that you're well educated.
Yep.
And then at that point, she can set you up on a search and you can go buy a house.
Yeah.
So.
Then we'll be driving together.
Exactly.
Okay.
Then you'll be in this place and I won't.
That's right.
Okay, talk to you later.